Hey guys, it's Crossroads here. Today I want to talk about Ethereum and Bitmine. That's ticker symbol BMNR. It has been a lousy November, and I know that many of you are curious, including myself, whether or not December and also next year hold something better in store for us BMNR investors and Ethereum investors as well. I am both. It's been a painful month. Let's take a look first at Mr. Tom Lee, and then we're going to look at a Bitmine specific update too. Short clip here, but it's well worth a listen. Let's listen.
Yeah, I think, in the near term, there's downside maybe to 2,500, but that's minor compared to the upside of trying to discount a super cycle. So we think ETH can be 7,000, 9,000 by the end of January, and that's a huge recovery move, but that's also pretty typical of what could happen in the fourth quarter.
And so Tom Lee is unchanged. He still thinks that the thesis is intact for Ethereum and, of course, Bitcoin as well. He had references not in that specific clip. And this was a event that or a interview that was back in November 25th. So if we see right here, you can see the date of that, November 25th. He predicted Ethereum could fall to 2.5K, and yeah, we were pretty close, right around there. He also retweeted today and said crypto prices have fallen relentlessly, even as fundamentals measured by wallets, on-chain fees, or tokenization have moved forward. We'll probably look at that next week just for an update there, but everything looks fine and well. As far as the ecosystem, we will look at some ecosystem updates too for Ethereum. But the biggest news, of course, is the price momentum. We can look here. You can see this chart quite a few different places. It's from CoinGlass originally. This is a monthly performance of Ethereum. Of course, Bitmine is mostly a leverage bet on Ethereum. There's a little bit more to it than that, but largely that's what we're looking at. So times when there's a pullback in the market like there has been, those are going to be painful months to own Bitmine. And the reverse is also true. Now, we can see 2025 is not quite yet in the books. So they do show December there, but it's too early to tell. But if we look at this, they've only been 3 positive months for Ethereum. That's one of the reasons why Ethereum is down actually year to date. Despite some absolutely massive, wonderful months, there has been a big pull down. In November specifically, this gentleman isolated that this is actually the second worst month as far as November's that Ethereum has had. Usually November is actually pretty good. Now, December, again, it's a little bit too early to tell, but there is some weakness and there's some reasons for it. Part of the reason is this. Now, if you were, by the way, in crypto back in 2020, 2021, before the last crypto winter, you may well remember that China banned Bitcoin not once, not twice, not 3 times. I don't know. I lost count, actually. It's maybe a dozen times. And they're trying to ban crypto again. It's a little bit funny at this point. Now, there are some reasons for this, but mostly this causes turbulence in the market. It does. Back in 2020 and 2021, it caused huge ripples and a huge down spike every time that they announced this. Although, as the market kind of got used to, okay, every other week China's going to ban Bitcoin again, then it had less and less of an impact. It's kind of like a certain analyst coming up with a price target of $3 and reiterating that every week. It loses its impact the more and more they cry wolf. So here specifically, they didn't like some of the trading activity, and there's a lot of concerns with stable coins. Now, there's not really much of a risk there for stable coins. This is very relative to Ethereum because, again, more than half of stable coins run on the Ethereum network specifically. Ethereum is the stablecoin network, although there will be other players certainly involved. China does not like stablecoins. A lot of it has to do with there's a little bit of risk there with some algorithmic that still exists for some reason. They shouldn't. That's such a small piece. It's really not a systemic risk at all. Don't be involved in those. Just look at history. There's also some that are backed by crypto. Those have a little bit more risk as well. Most stablecoins are backed by the United States dollar, and that is precisely what China does not like because stablecoins perpetuate U.S. dollar dominance on a global level. It also, of course, helps our treasury because it causes buying pressure on the 3-month treasury yield. The United States government is like, hey, we're pro-crypto. This is why. China is like, not so sure about crypto, and they're looking to ban it and, of course, stopping people from using it because they want to make sure that their currency is protected. The yuan And there's a little bit of risk there too. But that is, of course, caused some pressure on Ethereum and also crypto. And then this was the other factor as well. This is the 2-year yield for Japan. Doesn't matter too much, but I want to show you this right here. We have to go way back to the 90s, and there was some turbulent times in Japan prior to this. By the way, Japan was the China of now. People were like, hey, Japan's going to take over the world economically. It was an economic powerhouse, and they had some issues. Now, famously or infamously, depending on how you look at it, this yield on the 2-year, and actually for any other measure that you look at for Japan notes, has been very stable, but you can see it has actually increased, and it's accelerated. So year to date, we can see a little bit of an uptick, certainly from close to 0.5% to now 1%. You can see that inflection right up there, and then market reacted very much to this spike, just because 1% is a meaningful psychological level. Now, why does this cause the market to shift into risk-off behavior? And of course, that hits crypto. We'll talk about that in just a moment. Some of it has to do with simply that there's Japanese investors out there that are like, okay, we cannot get a yield in Japan. We have to go into other opportunities, including U.S. equities, including U.S. bonds, and a lot of other different types of investments. And so there's some of that where they flow back and they say, well, at least there's some yield there in the 2-year. There's other pieces to that as well, but typically when you see bond yields of major bond markets shift in an upward direction, especially over major psychological levels where you start to hear headlines of this hasn't happened since 5 years or 10 years or never ago, that causes the market to shift into a risk-off mentality. Now, crypto, some people have the perception that crypto is a safe haven and it's a hedge. Not exactly. It is a hedge against fiat utterly failing, but it's a hedge that is very much risk on. And so when the market is full of a risk on type of appetite, which might take a little while to get going again, then it's crypto time and crypto season. Of course, even winter, it'll perform okay-ish. But in the bull market, man, it performs really well. When the market shifts into risk off, and it's been risk off for a bit, this was another thing that pushed it from risk on to risk off very rapidly. We had risk on, it seemed like, towards the end of last week, and risk off, I mean, in the overnight market here, that hits crypto very, very hard. Now, as a result, it has an impact on Ethereum. It has an impact on BMNR as well. So before we look at that, let's look at the price here, price action. And so over the last week, you can see, of course, Bitmine, which is this chart right here, and Ethereum. Bitmine has actually outperformed 1.46% versus 7.01%. Now, part of that is, of course, that they did have earnings, although earnings is not as important for a play like this. If we look at 3 months, you can see that they're trading relatively close to each other and on a 1 month time span as well. Bitmine is actually underperformed. You can't go year to date because Bitmine, yeah, it wasn't Bitmine until relatively recently. So it's not shocking price action, although it can catch us by surprise looking and seeing again and again Bitcoin under 100,000, Ethereum under 3,000 as well. When will this reverse? Well, really the question is, when will the market shift back onto risk on mentality? Challenge right now with Bitmine and also several other plays, and I'll do a separate video on this down the road, I think, is we're in tax loss harvest season. What this means is if you have a whole bunch of winners in the market, congratulations, that's awesome. But at least here in the United States, unless you're in a tax advantage account, those gains will be taxed. The tax is capital gains tax. And so a lot of people will look at stocks or in this case, crypto as well, that they've been holding for a long time or a while anyway, that's down. And they say, hey, maybe I can sell that, harvest the loss, use that against some of those capital gains, and then maybe rebuy it, after 30 days or so. They can wait longer as well, but you can't rebuy within a set window. We'll do a separate video, I think, on that at some point. Bitmine is a candidate because, again, you can look at this chart right here for Bitmine. And especially if someone was a buyer back here in this area, in the 60s, or it ended up, there's a lot of opportunities in the 60s, 50s, 40s as well. You can, by the way, look at the volume shelf. I'm not going to do that so much here. There's a lot of buyers higher than where Bitmine has been. It's not an all-time low, but it is quite low. And so it is a tax loss candidate. Now, myself, I am not tax loss harvesting this because I am nervous that Tom Lee is going to be absolutely right, and Ethereum is going to go on a massive, massive tear here that will surprise a lot of people. Again, you looked at these 3 big months. The worst of those was up 20%, and we had a 48 and a 40% as well. How would Bitmine perform in that environment? Very nicely. I don't want to have covered calls that are very exposed there. I certainly don't want to be in the middle of a tax loss cycle, tax harvesting cycle. And I've already harvested some losses for the year, comfortable paying taxes on the remaining amount as well. Bitmine also did an update like they do every single Monday. And it's a really interesting update because it's very much in line with exactly what Tom Lee said, where he was like, hey, there may be some short-term pressure, but long-term, the thesis is still very much intact. And I completely agree with that here. So here is the update from today, like they do every Monday. If you're an investor in Bitmine, I do recommend that you follow them on X or you follow this PR Newswire, that you look at these. It's an important part of investment. They own more than 3%. Now, that was an update from last week as well. Unencumbered cash is the most interesting piece here. 882 million, nearly $1 billion of cash ready to go, ready to be deployed. And so if Ethereum continues to show weakness or even more weakness, and I expect, since Tom Lee said, hey, 2,500 is probably right around the floor, that they will be massive buyers at that amount. And they note here as well, Bitmine accelerates its Ethereum accumulation ahead of the upcoming Fusaka upgrade. We went into that last week, so be sure to check out that video, and you can see what that update is all about as well. Of course, it's still liquid. All the other things are true. We can look at NAV as well. 39th most traded stock. So those are all important things. But yeah, that was really interesting that they ended up saying, hey, let's have a little bit more cash. In fact, it's the most cash I remember them holding ever since I was an investor. This doesn't mean they're bearish on Ethereum. It just means that they're trying to be using some good tactics and strategy here. Yet, nevertheless, we can see they continue to accumulate. Here that is on a chart. And again, they just keep adding all the time, very aggressively as well. In fact, let's look at Bitmine on X because they do something really interesting here. And here we are. By the way, they followed me back. I like that. That's cool. So here is the way that they break down their update as well. And you can always click on that to get to the PR. But here's their weekly buys for Ethereum. And you can see this one is a little bit more aggressive. Again, there was a lot of weakness in Ethereum, so they're able to accumulate more. That's one of the nice things. Now, it's nice when there's a good premium between the valuation of their stock and the valuation of Ethereum. And there is right now. And so they're taking full advantage of that. And so they continue to accumulate massively. Now, the other thing that I thought was pretty interesting was this right here. They mention and they say, hey, Bitmine and Strategy as well are over 92% of the digital asset treasury trading volume. So another very healthy measure. All the others, this is including Solana, this is including Ethereum, this is including Bitcoin as well. They make up just 8% of the volume. And this sort of strategy, it is volume dependent, especially for Bitmine, who is, again, selling their stock for money, for cash, and then buying Ethereum as well. Now, beyond this, there was one other thing that I wanted us to take a look at here, and this was specifically the validator queue. Something interesting has happened here. So, of course, the Fusaka update is coming, and this is going to change a few things here. But largely, you can see the validator queue after a major validator was no longer able to be a validator. They just hadn't done what they needed to do to get that ready. You can see that the exit queue spiked immensely. Now, this was not tied to price action. The liquidity event, and Tom Lee mentioned and talked about this in mid-October, was not related to this. It was just sad timing. Now, we can see on the other side, there was an entry queue that was quite deep as well. You can look at the wait times. At one point, the entry queue was you had to wait 20, almost 7 days to stake, and you were looking at almost 50 days to actually exit. That's coming down quite nicely. It'll take some time just because these are done systematically. But yeah, this is very healthy. Credentials continue to go up in terms of percent. And supply staked, well, we don't see a huge increase there yet. But when, not if, Bitmine stakes their supply, you'll see this spike up massively because, again, they own a huge amount of it. Going back up here, we can see it's 3.7 million Ethereum, which is quite a lot. So everything seems to be intact as far as a thesis with stablecoin, with Bitmine. They're continuing to stick to their strategy. unlike many other digital asset treasuries, they're being very careful to not run out of gas. Running out of gas with the strategy, again, is when you are trading at an undervalued rate relative to the crypto that you're holding. And so if you sell your stock, it's very weak because you're actually diluting at that point. You want to be trading at a premium. And if so, you can sell your stock and buy the undervalued Ethereum. And over time, that will appreciate. They've been able to stay over MNAV for most of their time. They dipped down briefly for a day or two. They're trading, by my calculations, above that as well. There's a bit of a gulf there. And beyond that, they're keeping almost $900 million ready to go and be deployed at a moment's notice if they need to. And I'm sure that they will be buying up plenty of Ethereum on their way to getting 5% of the total supply. So overall, I think that things are well intact. Now, when will things start changing and shifting onto a risk-on environment? We, again, are in tax loss harvesting season. It seems that despite fantastic reads, at least so far, what we've gotten from the Cyber 5, the Black Friday, Cyber Monday, things seem very good. The consumer seems very healthy. Read after read after read indicates this as well. That has not shifted the market's mind. So I think it's tax loss harvest season for now. I don't see any reason why we would not have a Santa rally, which usually happens late December. There's some reasons for it, but one of those is typically tax loss season is mostly resolved by that time. People start doing that usually in November and also December so they can buy before the beginning of the year, because oftentimes assets perform quite well as we start the year, especially that first quarter. Now, the one challenge that I will say that is a bit of an overhang, and maybe we'll talk more about it at a later date, we're entering a midterm cycle season. Every 4 years, there's midterms in the United States, and usually until midterms hit, the market doesn't perform all that well. That does have an impact on crypto too. This is one of those cases where I think the market's been choppy enough that maybe we don't see too much more of a drawdown beyond what we've seen already. Maybe we'll look at that in a separate video too, but that's something to hold on to. But overall, things seem pretty solid and good. It's one of those bumps along the way. And I wouldn't be surprised if we see some recovery in late December and also in January as well, especially in that first quarter next year. So there you have it. Let me know what you think in the comments. Has anything shifted in your mind? Was there anything I missed related to Ethereum or Bitmine that is causing this downward pressure? And if so, when do you think that we start seeing a consistent upward momentum? Would love to hear it in the comments. And as always, thank you guys for watching, commenting, and subscribing. And until next time, happy investing.